The views, thoughts, and opinions expressed are the speaker's own and does not represent legal or accounting advice or counsel and should not be seen as such. The material and information presented here is for general information purposes only, a conversation. We make no promises or assertions on how this information will impact your business, your personal life, or financial well-being. The information relayed does not imply endorsement or offer opposition to any specific organization, product, or services. Welcome to Shift. I'm your host, Lori Power, and I'm looking forward to our conversation. Shift, I'm really pleased that Yarko has come back because in our first conversation, he opened up a lot of windows of thought that I wanted to explore a little bit more. But for those who may not have heard that first episode, Yarko, can you just take a moment and briefly introduce yourself, what you do, how you work with People Corp, and how long you've been doing it?
Awesome. Thanks, Lori. Yeah, as you said, my name is Yarko Petriw. I've been in the insurance industry in one form or another for almost 22 years now. In People Corp, I'm a vice president of corporate development, and that means I'm really responsible for driving our inorganic growth strategy, our acquisition strategy, if you will, across Western Canada. I was a practitioner on the sharp end, if you will, for about 19 years. Working with clients, building sales teams or building sales and service teams, and also involved with clients directly myself. I've been in this role now for 2 years and loving every minute of it. So
When we spoke last time and I asked you for a word that you would say if a broker or an advisor is in whatever stage of their business, what you wanted them to think about. We do a brief recap on that because that is the catalyst for this conversation.
absolutely, and I think it's very much thinking about what they want their future to look like. And I know that that sounds very sort of like, of course it is, right? But fundamentally, what do you want to be spending your time on? What are you spending your energy on? What do you love about what you do? What do you not love about what you do? Are you spending enough time with the family? Are you spending too much time with the family? And all those types of things, and mapping that out for themselves so that so that they understand sort of like what is the end state, how far are they away from that, and what's accelerating their progress and what's holding it back.
That leads us into identity as well.
Yeah.
And we're in the CEPA, we're really interested in not just, is it time to sell the business and the process of selling the business, but who are you after you sell the business?
Mhm.
Now, I know that when you're taking a company through and you're doing that acquisition, it really is dependent on where the advisor is in their stage, what they want to do, to whether they still want to be an entrepreneur. Maybe they don't want to continue in the insurance world, and you work with them in that stage of wherever they are. What does it look like in taking an entrepreneur and moving them back into, say, an employee?
Yeah, and I meet a lot of entrepreneurs that have never been employees. So do they even know what that means? Often they do, or they have some conception. It's usually not particularly positive. So it's not. It can be a tricky starting point. But I think I think the way we've solved for that equation of how do you turn an entrepreneur into an employee, it really sort of it's changing what employee means. And the only way to do that through an acquisition process is in how you structure that deal. So not just the financial aspects, although that's critical, but like what are the understandings and expectations between the two parties in terms of, where's that person going to spend their time for the next 3, 5, 10, 15 years, right? And obviously, if it is 10, 15 years, then there's always room for evolution. But really understanding that, what aspects of what they do they not love and want to shed? Where do they want to focus their time and attention? Do they want to evolve out of the business and into something else within, let's say, our firm? I built this, for example. It's been great. I've got a team of 10 people. I think I've got the skill set to do this on a broader scale across Canada or something. So sometimes there's those types of considerations. But I would say it often comes back to, is the deal structured to sort of create the landscape for that individual to work the way they want to work following that transaction? And then layer on top of that, is it incentivizing them correctly, right? And part of the excitement for a lot of entrepreneurs is the financial aspect. They're building wealth, and what have you. And so, if you just hand them a check and say now you're on a salary, you're not doing that anymore. You're collecting, right? But you're not doing that in the same way. And so, is there ways that they can continue to participate, for example? And we can get into that, but like obviously the economics of the situation have to make sense for that as well. If you have a small business, there's not a lot of room to play with from a creativity standpoint, but there's always some. If you've built quite a large business, then there can be a ton of creativity in terms of how that deal is structured to help you thrive post transaction and remain engaged, remain excited. So again, when I'm talking a lot about deal structure, but if you take that one step back, it's the conversations that gets you to that deal on the paper, right? And it's a lot of conversations. It's a lot of diligence and understanding the mechanics of the business, but then also understanding the individual or individuals that are coming along with it, and what it is they want to get out of it.
It's a bit of psychology, isn't it?
Oh yeah.
It's applying that the emotional side of things has to be accounted for, which I like to say, you know what? What's my identity? What's my identity now? There's a certain pride in being an entrepreneur and being a business owner and owning that.
Mhm.
You stand a little taller, your shoulders are a little broader, and you say, I own this. When you're transitioning an entrepreneur into an employee, I could say that's probably a tricky minefield to navigate, to keep that pride and that enthusiasm, as you say, that spark for doing what they do alive in whatever way that they're doing it. What's your magic formula there?
The magic formula is that there isn't a magic formula. It's very much understanding each situation as a unique situation, if you will. And really, like it's one of the reasons we don't have a one size fits all deal, right? Like, I think that's the simplest way to put it. Everyone is nuanced. Like, certainly some look similar, but everyone is nuanced. And again, it's very much kind of understanding, what again, like what aspects of what they're doing do they enjoy? What are they potentially afraid of? Right? What are they concerned about coming into, for example, a larger organization such as ours? A lot of the entrepreneurs that have joined us, like I would suggest they've maintained a fairly high degree of autonomy with a lot of support to back them up and give them the tailwinds that they were looking for. So when you mention, they're an entrepreneur, their shoulders are broader. I own this. I'm the CEO or president of this. I think it's a remarkably valid and important statement to make, because you're not 100% that anymore. But depending where you're joining and what that looks like, you do still very much control that. And so maybe it's, I built this and now I'm taking control, or I'm taking a concerted effort to evolve this, right? And what is it going to grow into, and what can it continue to be and become? And so there is a bit of a shift there. Like, I think you're always giving up a bit of that pride of ownership because you're giving up the ownership, right?
For
So there's aspects of that for sure, but absolutely, again, it kind of comes down to the culture that you're joining, their sort of expectations for you, your expectations for them, making sure that that's very well understood, and as aligned as it can be. So.
Is there and you said every deal is unique as a fingerprint. Is there a typical timeline that you'll see where the entrepreneur will shift and work in an employee capacity and then find their next best adventure
Mhm.
and move on? Is there a typical
So I would say that I would say we're a little bit atypical. And the reason I say that is, most of the advisors that have sold to us, or let's say principals of these businesses have sold to us, are still with us, and we've been in this game for a very long time. And so it's safe to say that. And so, clearly we've done something right there that's created that environment, that people do want to stay. But I think that, there's absolutely, call it a segment of the market that they only want to be in it for another 12 to 18 months. Like, they're getting towards whatever they've already kind of thought, I want to move to Hawaii. I want to do this. I want to do that. I've put in my time, right? And when that's the case, then yeah, you'll see these, call it, 1 to 2, maybe 3 year stretches where they'll stay. But increasingly we're seeing these business owners that are, call it, traditionally what you would call sort of mid-career, that are looking at, well, maybe I take some chips off the table and evolve in a different way. I don't have to do this. I don't have to take all the risk myself anymore. And because the landscape of our industry has changed, that I could potentially, take this to the next level, whatever that means, with someone sort of at my side, with someone helping me with the tailwinds and taking some of the risk on for me.
What you've just opened up in my mind is talent acquisition. So not only has People Corp grown, as you said, inorganically through these acquisitions, but because of the method in which you are transitioning that principle, now People Corp as a corporation has now gathered some significant talent to help in other ways. And I'm making the assumption here, and you can correct me if I'm wrong, but that's what it sounds like to me, is that you now have these brains all at your disposal to say, okay, well, where are we going as a larger company now? And how do you want to be a part of that? That's pretty exciting.
Yeah, and I would say that, like advisors that are coming on, I think one of the hallmarks of our culture and approach is that they very much do have a voice at that table. We're still a firm in evolution. We're excited to say that. We haven't chiseled who we are in stone. We're still evolving, which is great. But we also have there's lots of examples across our business where, sort of as I alluded to before, where someone's come in with, brought in, sold their business to us and been a part of that, been engaged, been excited, and then put up their hand and say, hey, I want to tackle something sort of one level above this. Like, I think I have something to offer to the people like me, that, all the other practitioners and or principals like me. And maybe that's helping with sales or service and leadership in a lot of different senses. So we've had a number of people do that. And obviously from an organizational standpoint, that's fantastic, right? Because when you're led by someone who's a successful peer, as opposed to someone who's just kind of dropped out of nowhere, like, I think there's a certain connectivity there and understanding there, and ability to work together, right? So
And a mutual respect, it sounds like. It sounds
yeah.
like a very mutual respect in a linear growth atmosphere. What am I not asking you that we should talk about?
What are you not asking me? I don't know. You're asking me really good questions. So,
I like that.
um,
I'm glad.
yeah, I think, like, maybe some of the, call it, misconceptions and some of the pitfalls and things like that. And again, like, every conversation I have, every advisor I meet, whether it's for the first time or the fifth time or what have you, I'm learning something new. And because there's so much activity in our industry around acquisitive growth and what have you, there's all kinds of phishing stories and all kinds of tales being told. And I think it's messing with people's expectations a little bit. And so, and I'll give you an example of that is, like what do I need to have together for somebody to consider acquiring, right? And, is it a spreadsheet with my client list and a couple of years of financial statements and, hey, where's my offer, right? And I think that's a pretty common one. I'll get the quote unquote the proverbial shoebox full of receipts that your tax accountant gets every year, and say, like, hey, make me an offer based on this. And you're like, oh, okay, no, like, we really need to understand all sorts of, like, where the different gears fit together and how they turn to generate revenue, to generate business. So again, your question was, what have you not asked? I think part of it is, yeah, it's like what sort of misconceptions or what's been misconstrued in the market, because there's so much activity and people will see a news flash here, a news flash there. They'll hear something at a conference or what have you, and then the story starts to evolve as they do, right? So
And I think in any sales atmosphere, it's always, somebody will say something and you should be able to take 20% off of that and get to where the reality is. You've keyed something here that I wanted to chat about a little bit, and we talked about it briefly last time, and it's the value of the business, the actual value of a business
mhm.
versus my emotional value of the business. One of the misconceptions that we come across is what's my real number? So we have the EBITDA, that's
Yeah.
fine, that's your number. You have your tax number. But many times, and I think this would go into transitioning an entrepreneur from an entrepreneur to the employee, is the tax side of things. Is I have my revenue that I've taken from my business for year over year over year, but I haven't accounted for how much I claim through my business
Mhm.
that I wouldn't be able to do as an employee in that tax side of things. How do you prepare, or do you prepare, or do you leave that for the accountant? I'm thinking you probably leave that for the accountant to go through, but I think that's sometimes a miss. So I'm going to preface that a little bit more and be a bit more long-winded when I say, when we, or the advisors in the room that do financial planning, we all know that the first year of retirement is the hardest year because you're paying tax on the year previous and you weren't expecting that. So how do you work toward preparing somebody who's in that transition process to what your income is really going to look like when you can't make all those claims through the corporation?
Totally. So it's a great question. So I think this really sort of falls into the bucket of, what we would call sort of normalizing a business, right? And so I'll start by saying it is like, if we come across a business where someone's not putting through, all kinds of interesting expenses and what have you, that just makes sense for them from a tax perspective, then that's almost a red flag. Like, it's just it's natural that you might have your vehicle, all kinds of things, or you might be income splitting. All this is just making sense. So the process of normalizing, like, certainly something that your accountant can kind of help you with. We when we're looking at getting to a letter of intent, or considering putting forward a letter of intent, we do go through a process. That's part of the reason we ask for the amount of detail we do, and it's also part of the conversations, right? So, like, oh, there's X amount of, $25,000 in travel last year, 40,000 the year before, what have you. Let's talk about that. And like, maybe you've got clients across the country and you need to go and do that. Or maybe it's, yeah, I kind of go to this conference and then I hang around for a week after that with my wife and kids, right? And that's fine. So the process of quote unquote normalizing, which I think, it is a somewhat collaborative process because it has to be understood, all of those expense items and what have you, can kind of help you come to a number. And oftentimes, these normalizations are items that are potentially, it might be helping you from a tax perspective, they might be dragging your EBITDA, right? And so when you're adding these back in, it's a net positive for you from the standpoint of the actual, call it cash, the value of the transaction, like the money you're going to get at close and what have you, because these are dragging EBITDA. So, and of course your EBITDA is being multiplied by a multiple. So any one of those transactions, like, once you sum up a bunch of small transactions and you multiply that by whatever, oh, that's actually a meaningful amount of money. So it sort of becomes, an understanding that you have to now park that habit of doing it this way, but you are getting something back for it, right? On the compensation piece, that's another one, right? Like, you might be taking dividends plus a salary plus what have you, and expenses and various sorts. So yeah, any business acquiring you, particularly if you're going to stay on for a while and have, call it a salary and bonus structure, your comp might be a little bit less, but again, you've taken X amount of dollars off the table, right? Which hopefully helps you live the lifestyle that you want to live. But that's an important, I'm sort of branching all over here, but that's an important part of the conversation is, what is the lifestyle you want to live? Like, what are your cash flow needs, right? And making sure that when you're talking compensation with that potential acquirer, it's aligned with, again, like, where do you want to spend your time and energy? But the actual absolute amount makes sense for, what you need to continue living the way you want to live. So.
I like that because that leads into that identity as well.
Mhm.
What does life look like after? Let's end this particular session, and I know this won't be our last because we're just scratching the surface here. Let's dispel one of the most prominent myths that you come across almost with every start of the transaction. What is the most common myth that you come across?
The most common myth. Um, okay, so I think this answers this question, but I think it's certainly, I don't know if it's a myth, a misconception, or maybe it's the chatter in the marketplace creates this conception, is everybody hears rumors around multiples. What is this person getting? What is that person getting? And they might get an offer that doesn't look anything like what they're hearing, and they feel downtrodden, dejected. What's wrong with my business? What's wrong with this acquirer? What have you? And so I'd say, like, the myth is, you know, people will pay, or I guess there's an idea of a rising tide floats all boats, right? And there's a degree of truth to that. But some of these boats are going to float way higher than the other ones. And that's because there are aspects to their business that make them hyper attractive, much more valuable. Typically, that's a combination of profitability, the team, and current growth, or, like, say, track record for growth, and what the acquirer believes that company can grow at post acquisition, right? So you layer those things in, and then you layer in, is the principal or principals that have created that successful business, are they staying on and helping us continue to do that, or are they pulling the chute? Because a business is worth far more, typically, with that principal remaining engaged and in there with vigor to continue doing it, than if it's a 12 to 18 month exit. Right? If it's a 12 to 18 month exit, you're really buying a list of clients, and maybe
Right.
if there's a bit of a team behind them. It's always going to be more valuable if you're acquiring a business that still has, those firebrands or those leaders, whatever you want to call it, engaged in a part of it, because they know better than anyone else what made them successful. And what they're trying to do, hopefully, in a transaction, is augment that success by, adding firepower, right? So,
I think that in itself is a myth as well, that, I'm going to sell it and be done.
yeah,
It's going to walk away. That's not the type of business we're in. We're in a relationship business. And I think we have an obligation, not just to the acquirer, but to our clients, to bridge that and be that success transition from
yeah,
one to the other. Otherwise, I would suggest what you say is exactly true. If you just sell it and you're done, it's a crapshoot for whoever buys it. Is
absolutely.
this going to work? Is that person going to like me? Are those groups going to like me? Do we have a values match? If there's no bridge there, how can we bridge that values match?
Yeah, and maybe I'll put it in a slightly different lens, and I might look at it from our perspective. Let's say that we want to grow at 10, 12, 15% organically year over year. When we're adding these businesses, we want them to be engines driving that growth, because you're always going to have some business that's not going to have a great year within the firm, some that are going to have outstanding years, and you're hoping for that average to be somewhere there. So when you're looking at the business saying, like, well, these folks are hitting it out of the park, and therefore once they're on board, they're going to really contribute to that organic growth, then it's easy to start to think about it like, oh, okay, well, they're going to value that more so than steady Eddie, right? Which, or more so than a business that's shrinking, right? So the number in terms of value is not tied to a fixed point in time. It's tied to what got you there over those last few years, and where are you going to go. And a big part of that is we just talked about, is like, what is your role going to continue to be or not be?
Well, I thank you for your time. This has been a great conversation. I love great conversations. I thrive on great conversations. I thrive on the learning. I learned a lot from you today. I appreciate that. I hope whomever may listen, those one or two people, will also learn and dispelling the myths. I'm going to put a pause in it because I know we're not done. You've opened up a lot of room for thought for further conversation, and I hope I can invite you back.
I'd be happy to.